41%. That's by how much the US market has surpassed job creation's expectations last month. Welcome to this week's financial market review. Last week was concluded with the release of an exceptionally high US job creation figure. Consensus expectations were for 647,000 new jobs, but the actual figure was 41% higher, with 916,000 jobs created last month. Even if markets were closed for Easter holidays, stock market futures rose following this announcement, indicating that investors appreciated the good news. A too-good job creation figure could have raised fears of an earlier-than-expected monetary tightening, but investors seem to be coming to terms with the normalization of the economy, including a less accommodative Fed by the end of 2022. Powell's speech on Thursday will probably give some visibility on the Fed's future decisions, especially after such a high job creation figure and an ambitious infrastructure plan that could be approved by Congress by the third quarter. However, the U6 unemployment rate, that is the number of people looking for a job or those who have quit looking for one, remains very high, which is the indicator that the Fed follows before raising rates. On the oil side, finally OPEC Plus members have agreed to raise oil quotas gradually over the next 3 months, which also gives comfort to investors. All this offers a promising outlook for the start of the second quarter after a very positive first quarter for equity markets. The S&P 500 gained 5.8%, the Euro Stoxx 50 and the Nikkei almost 10%, whilst China raised almost all of its earlier gains. The Fed and the ECB minutes to be released this week should confirm the support of the central banks, while the release of the March inflation in China should not change the policy of the People's Bank of China. Let's see what this week brings along in the US and Eurozone with all the happenings around. Till then, stay tuned and have a nice week ahead.